What you need know about short-term business loans. Running a business is always a bit of a gamble. That's why business owners are always searching for ways to shore up their business finances. If you're in a slump, short-term business loans can give you a cash injection to recover. Before you get a loan, there are a few important things to know. We're taking a look at them below. Have a plan. You must have a plan when you apply for a loan. It's vital. Having a plan doesn't just tell you how much you need. It also ensures your loan has a purpose. Without a plan, you're likely to bleed away your loan on sundry costs. It's too tempting to dip into loaned money and keep expenses off your bottom line. Ask yourself exactly what the loan is for. Break down the loan into smaller chunks and calculate what you'll need. Only then can you arrive at a final figure to borrow. Breaking down your loan like this also helps you keep on track. You can move different parts of a loan into different accounts to control where it's going. You're much more likely to use the loan productively if you plan in advance. Get cash quickly. One of the great upsides of short-term business loans is how quickly you can get them. Traditional business loans could take months to come through. Your lender will undertake exhaustive credit checks to ensure they're likely to get their money back. Lenders offer short-term loans for businesses who need a cash injection now. You'll often receive them in a matter of days, with instant access to the money. Unlike long-term loans, they may be secured with collateral rather than credit checks. Short-term loans also cut down on the reams of paperwork that accompany other loans. That saves you man-hours and trips to the accountant's office. Cutting out these hoops makes short-term loans a viable option for businesses needing a quick boost. That might be to cover a difficult period or launch a new seasonal project. Either way, they offer great flexibility. This makes them a great solution for taking advantage of time-limited business opportunities. With a short-term loan, you could deliver a large customer contract or hire temporary staff for a project. Can you meet repayments? Short-term business loans often have quite strict repayment terms. It's important to make sure you can meet them. Don't get caught out by the repayment demands of short-term business loans. They'll often be weekly or even daily. Ensure you have money set aside, as it should take priority over non-essential expenses. Failing to meet repayments could ruin your business. If you're using a hard money loan, it could also lose you your collateral. If it looks like you're going to default on your loan, contact your lender ASAP to discuss deferment options. Understand interest and APR. Lenders will present two figures when talking about loans: interest and April. It's important to understand what these mean. Interest is the most understood of the two. The interest rate is an expression of how much extra you'll be charged over the value of the loan to be repaid. Most loans will quote the interest rate up front and include a final figure to be repaid. APR stands for annual percentage rate. APR can be complicated, but it's easiest to understand it as an expression of all charges associated with your loan. It includes interest along with other non-interest costs. Understanding these two terms will give you a guide to how much your loan will cost in the long term. It's important to know what you're paying back so you can budget accordingly. Are you eligible? Not everyone is eligible for short-term business loans. Know your credit situation before you go shopping for one. If you have bad credit from previously defaulted loans, you might struggle to get a new one. Bad credit could come down to your personal or business credit, or a mix of the two. Poor credit isn't the end of the world. Hard money loans are available for businesses who are prepared to secure loans using physical collateral. This process is usually faster, and the lender will consider the value of your collateral more important than your credit history. The good news is that taking out and repaying short-term loans will help you rebuild your credit. They may be the stepping stone you need to reach loans better suited for long-term investment. Of course, defaulting on a short-term loan will do even more harm to your credit score. Think carefully before taking out a loan, or you may find yourself caught in a debt trap. Know the terms before you take out any loan. You should know the terms. Don't just go by what you're told. Read all documentation that accompanies the loan. If you have questions, ask them before you sign. Speak to your accountant for a second opinion. If you sign a loan contract without understanding exactly what's expected of you, then you'll only have yourself to blame if things go wrong. By signing the contract, you agree to take on all payment responsibilities along with financial repercussions if you